Let's now bring in Delano Saporu, who's at New Street Advisors. He's also the founder and CEO there, also a CNBC contributor. Delano, thank you very much. Let's start it up with Tesla. I mean, this is pretty big. This is not a call on whether it's a buy or a sell from my standpoint, but it catches someone's eye when you say it was 100 times forward earnings and now it's 31 times. What does that say for you? Are you a buyer or a seller?
Hey, Dom. Yeah, that is attractive, and it does catch someone's eye, and it actually caught my eye at the beginning of the year when it was trading a lot less attractively. And now, if you look at that trade not been working so far, I think a part of that's the macro environment, part of that's reports of production cuts over in Shanghai. And so I think, when I looked at it now, there's an opportunity when, the valuation's gotten a lot better. If you look at actually the industry, we know that, there's a push towards electric vehicles. We know that Tesla's the biggest brand name and the biggest market share in the U.S. in that area. And so, even if that competition tends to pick up, I do think they'll bode well. I think, expansion and production in Europe is getting better. So I like it here, and I liked it earlier. So I definitely like it here. And I think if you're holding, you can hold. And if there's opportunities in the next couple of months, there might be to actually buy here as well.
I just keep looking at that 29.83 forward PA. Used to be over 100. It's just remarkable. All right, Delano, what about Meta, which has long been kind of a value stock, if you want to call it that, but it's pretty much near its cheapest level ever now, 17 times forward earnings estimates.
Yes, definitely around its cheapest level, 7 times forward earnings. Hasn't done well year to date. In the last, month or two, it's bounced a little bit, and you saw that because of a lot of the restructuring that's been happening at Meta, and investors did like that. I think, they still have headwinds when it comes to competition and addressing, the privacy changes and seeing if commercial ad spend will come back on the e-commerce side. But, overall, this is a hold for me. I think if you look at it just from, the top down, you just have an area where they have the biggest, family of apps and over 4 billion users that are still on the platform. So I think ad spend comes back in the late half of 2023. And we see a company that has been spitting out profits rather well for, a decade. And so I think that continues, but there's some headwinds that they'll have to get through first.
All right, so that's the call on Meta. I also want to take the final name here. It's JP Chase, Delano, now trading at a forward price to earnings ratio of 10 as the financial sector continues to suffer this year. Now, I will point out that at a discount valuation from an earnings basis, many traders and investors look towards book value. This still does trade at a premium to book, more so than others. It trades at about 1.4 times book. For comparison, Bank of America trades right at book value. So is JP Morgan of value at this level?
I think, looking at the price action, relative, obviously, the tech names we mentioned, it's held up a little bit better. I think, one of the areas that I like is the consumer banking side. When you're talking about, obviously, the interest rate environment we're in right now, a lot of it, could be a benefit for the banks and on the consumer banking side if they have, obviously, higher loans that they're getting higher interest on. And also, if you look at the lending and the deposits increase on the side for JPM, that's the things that I like. I know that the capital markets has dried up and M&A has kind of dried up, but the banks, if you look at JPM and Bank of America, they've done well on the consumer banking side, and that's the thing that's attractive here. Whether it's a better valuation, maybe not as crazy as more attractive as the other valuations, but I still think it's one that you could potentially buy if you're looking to hold on to something that could potentially have a tailwind going into 2023 based on the interest rates that we're at right now.
A lot of traders out there point, Kelly, towards the outperformance in JP Morgan over other big money center type banks. All right. Delano Saporu, thank you very much for the 3-stock lunch on Tesla, Meta, and JP Morgan. We'll see you next time around.